what we know so far of this tax reform plan, what does it mean to you in your job as chief market strategist when the market's been going higher anyway?
Yes, well, the real question becomes how much of it has been priced in. I mean, it's unambiguously, I think, a positive for growth, at least in the near term. But the question is, given how much multiples have expanded pretty much across the board, whether you're looking at large caps or small caps, has the expectation for reform been built into stocks? And frankly, when I looked at the move in small caps on Wednesday, I was actually quite startled by that 2+% move higher. And it appeared it was largely driven by moves in small cap financials. I think both because of tax reform, but also based on some regulatory reform provisions that were proposed on Wednesday as well.
All right. And in fact, I'm just going to show you a chart. In the Bloomberg on small caps, if you just want to have a look, you can see there the rise and then the continued rise and then the spike here in small caps in particular. So obviously, the market thinks this is going to pass. If it doesn't pass then, or if there's major changes to it before it gets through Congress, does this all reverse?
I'm not sure. I've been of the mind for a long time, and you and I have had this conversation, that I do believe tax reform is an important element to support for stocks. However, the more important element I've been talking about for most of the year has really been central bank monetary policy and central bank support for risky assets, specifically how aggressive and accommodative the Bank of Japan and the ECB have been, and how they've been buying risk assets directly, and how that $2.1 trillion of quantitative easing between those two banks has been the real underlying support across risk assets.